Trade right off the bat was a bad trade. I don't know what I was thinking. I got in way up here. You see how high that is? Trendline breaks over here, all right? Right there on that pintail, right off the moving averages. That's where you get in. Stop loss would have been under this. The same mistake I made yesterday, where I get in high and my stop loss is in the wrong place. So I would still be in this trade. I don't know what's going to happen, but I wouldn't have been stopped out so quickly. And that was a bad entry. Got in too high, stop was too high, and that's what's wrong. Now I'm going long because everything's telling me it wants to go up. All my moving averages are going up. Moving averages are all above the 200 moving average. On the 10,000 tick, on the 5,000 tick, everything's going up here. On the 2,000 tick at the top, right? And on the lower time charts, we may see some type of bearish activity, but that's just so we can get a trend line break to the upside. So I'm not worried about those. I worry about the 10,000, 5,000, and the 2,000, and even that'll look bearish sometimes if it's going to correct deeply. So as long as the 10,000 tick chart, my 15-minute chart, are bullish, and we have a daily bias where we believe that price is going to continue up, which is, here's the daily chart. The all-time highs are up here. It's reasonable that it might go upwards. It looks like it's upwards. It did push upward, now it's falling down. It did push upward, now it's falling down. Of course, anything can happen. It can come down and sweep liquidity. It can do a deeper pullback to the 20 EMA. It surely could. But as long as my 15-minute and mostly my 10,000 tick chart are bullish, and what I mean by bullish is that the 20 EMA, the 50 EMA, and the 200 EMA are all going up in the right direction. Sometimes price will pull back below the 20 and in between these two, like right here, that's the caution zone. And sometimes it'll drop down here below the 20 and the 50 down here. That's the danger zone. It's hard. It's telling us that, there's good opportunity if it bounces, and then sometimes the best prices if it bounces in the danger zone. But what we don't want to do is look for trades when price drops below all three of these, and starts pushing below the 200. Then we're looking to go short. It's a completely different direction at that point. All right, so right now we're still bullish, and if we get stopped out on the second trade, as long as this is bullish, I'm going to be looking for trade opportunities to the long side, trendline breaks, and Fibonacci pullbacks. And that may be something that I need to kind of remind myself here, because the second trade I did take was a better trade, in my opinion. You could see this trendline break right here. We got in as soon as it broke, right? And we've been in this trade. This is a much better entrance than way up here at the high point. That first trade was not good. The second trade here is much better. I'm happy with it. In fact, if I lose on this one, I'm actually quite happy. I'm very upset that I lost the first one, however. I'm very upset that I lost the first one, that I just came right in and made that same mistake that I made yesterday. So that's aggravating. All right, so those are the first two trades so far today. So let's see what happens. All right, we did good on the second trade. It broke even above the entry point, but it did go up, and it started to trail our stop. So as soon as it went up 18 ticks towards the 25 tick first target, our stop losses were brought up to 1 tick above break even, and that's where it just whipsawed back down, and we broke even above break even for that trade exit. But this is a much higher quality trade setup, and it executed exactly how it's supposed to on the ATM NinjaTrader trail stop strategy that we have. So I like that. I'm going to keep looking for trendline breaks to the upside. These candle formations are looking quite bearish, though, so I would not be surprised if it doesn't pull back. These candle formations are looking quite bearish, though, so I would not be surprised if it doesn't pull back somewhere in the fib range of this level here, definitely down to the 50 moving average. I would not be surprised, but in the meantime, I may want to think about grabbing whatever little profits I can get out of a move, and not really trying to go for the full target. This is a strategy because my stop loss was so small here. This was already up 3-to-1 on that risk, so I might have to adjust my strategy just a little bit and shoot for a different target based on the amount of risk that I have. So we'll see. Trade 2 is in the books, though. Okay, I need to make a note that The way the daily chart fell below the previous day's high is an indication. I need to pay more attention to this. I think I'm just in experimental mode. I want to take every trendline break just to see what happens. That's not professional. I'm cutting it out right now. I noticed that price had dropped below previous day's high. That's an indication of caution. And my main time charts that I like to observe are telling me that these wicks in this pattern is wanting to go lower just from candle formations. Studying candle formations, these are telling me there's weakness and there's momentum to the downside. All right. And then if I look at, the hourly chart or something, we do have room for a pullback, and all this liquidity that was generated, I think it just wants to suck it up. I think it wants to go down deep. Maybe even real deep down to this pivot down here, which will put us in between the 62 and 76% Fibonacci pullback. It's all fine, but we can't take trendline breaks right now to the upside, even if we want to. Yes, price is still above and things still look bullish in terms of a longer picture. The main time chart that I trade on, moving averages are all in the right direction. This is telling me I should be looking for long positions. The hour chart is still bullish, but there's times that you need to have some discernment and wisdom about, okay, this is headed for a correction. And yes, it might bounce, and yes, it might eventually turn up like we're looking, but this kind of correction right here can still happen, right? And trying to buy long while it's going down like that is something I need to work on, absolutely. So I'm still going to be looking for longs. Why? Because the day chart's still bullish and the hour chart's bullish. And as long as the 15-minute and the 10,000 tick charts are bullish, I want to go long. I think I should go long. But then again, once it tips up over the high of the previous day and comes back down, that's a sign to me. Like right here. When this happened right here, went up, came down, and the whole day just trended down all day long. You want this to take place. You want it to go up over the top of the previous day and continue right here. It tipped up over the high of the previous day and went down and kept going down, right? And so that right here, it went up over the previous day and it kept going up. Okay, so now that I know that, now that I realize that, I'm going to be probably holding off on going long, and I want to practice controlling my video game mentality. If price continues to drop below and these moving averages cross one another and start heading down, it's possible I could try to get in short positions a little early before it breaks the 200. But I really like everything to cross and price to drop down below the 200 moving average on the 15-minute and the 10,000 tick chart. So what am I thinking? I'm thinking it's very difficult to trade right now. Even if I get a trendline break at the moment right here, I know that it's higher risk because of what we're looking at on the daily chart. Could it go up? Could it break the trend? Could it break the motif? I mean, right here's a good place for me to take a trade. Right here. It's trying to break over the trend line, right? It's got some wicks going right here. The stop is very, very close. It looks good on the 5,000 tick chart. It's starting to break up over the 2,000 tick chart. Why not give it a try, right? Give it a try. Let's see what happens.
Order filled.
My stop needs to be below this wick, and my target needs to be set up here. This is going to be, it's probably the last try here because I am really tired of losing. I think I've lost more than I won today, and that's not good. If this is done right, this particular technique, if it's done right, has almost a 70% win rate. But if it's not done right, it's gonna whoop you up. So let's see what happens here. Maybe we'll get another winner out of it. Maybe I'll close early, go on break even now, take whatever profits I can get, kind of thing, because I know it's a risky trade.
Order filled.
It's gonna get out of it. I don't trust the day chart. Simple as that. So here's the thing about holding your targets. If everything is a go, if everything is 100% checking the box, if everything looks good, lined up perfectly, 100% perfect A+ setup, then I think, we're looking at hold your position, let the trade play out, keep your stops in place, and just let it work itself out. From what I've been observing so far this morning, with the price action falling below the previous day, yes, it can go up, but I'm just going to take whatever I can get. Now, I don't like necessarily doing that, and maybe I shouldn't even take any trades if I have to do that. because if I start getting into that kind of mentality, then it's very difficult to get out of. I want to mark where my stop loss was right here just to see if it would have came and stopped me out. This looks good. It looks good because it's breaking the trend lines. It is bullish on all my time charts. This could be the place where I should have waited all this time for the trade. And, it's possible that I'm just having bad entries and not thinking these trades through because I have to wait for, what am I waiting for? I mean, the day chart still looks weak. I would think maybe if price gets back up over the top of yesterday, that would be a good sign that, hey, okay, it's okay to do that now. I guess if price closes back above strongly over these two moving averages, that would also be a good sign, which it hasn't happened. I need to optimize my trading strategy because there are times when I can't just blindly take a trend line trade just because price and the moving averages are going in the right direction on all time charts. Okay, I can't. There's something missing, and I need to figure out what that is, right? So I'm going to keep observing today and keep making notes, keep learning, keep observing, keep practicing, and keep modifying and optimizing this strategy because there's still some weakness in it. I want to say, yes, that would have stopped me out for a full loss had I not been aware of outside circumstances. The trading system can't be too mechanical. It seems like there are times when things are questionable, things are changing, things could definitely develop in the wrong direction. So normally, I would say, as long as price is not below the 200 moving average, and it's still like this on the 15 or say 10,000 tick chart, see how it's still trending up. Down here, when it went up over all the moving averages on a 10,000 tick chart, this is when I started going long, and my bias has been long ever since. This was a time when price was shooting up on the day chart. It looked good on the day chart probably, I think. But here, we have a sweep of liquidity and now it's going down. I wouldn't be surprised if this pulls back quite a bit deeper. But the attitude has always been that as long as it's above the 20 and the 50 and the 200 and everything's going up, we're looking to go long. We're looking for bounces. And it's probably true that we could catch a bounce, like some kind of bounce on this, and I'm still tempted to do that. And I wouldn't do that if price was below the 200 moving average right here on the 10,000 tick chart. I might do it when price is below, starts dropping down here to this, maybe if it sweeps this liquidity right here, that would be interesting. And why is it going down so fast? I have no idea what's going on in the market right now to make this move. And sometimes nothing is happening. And if it sweeps the pivot on this liquidity level right here, I'd be interested because that's right near the 200. Some kind of a bounce in this area would be interesting. Here's the previous day's low. Now we're getting into the previous day's low. We had talked about the previous day's high, and we said it fell below that. Here it is. Now it's going to the previous day's low, right? And so here we are with some kind of a bounce possibility here.
Order filled.
If it breaks over that trend line, I'll give it a try. See if it'll bounce here for us. Even a little bit. No, it's not going to bounce. It wants to sweep. I probably should have waited for this level to be swept right here. Yeah, I definitely should have because it's not ready to go back up yet. Here it comes to stop me out. There it goes.
Stop filled.
Okay, so that didn't work. Let's take a look at some higher time charts here and take a look at these trend line break potentials. Okay, look at that. It just shot down past all that. It's past the low of yesterday. Now it's getting below the 200, and this is an area where it's getting very unmanageable. And this is kind of a rule where we're not really looking. If it closes below this and continues down, we're not looking to go long. So we need it to stay above the 200 moving average, or at least bounce. Say it closed below it. And if it doesn't bounce right here on this candle and it pushes, then it's a no buy zone. We cannot go long on this position. Now, if it continues down, then we're looking to go short. It's changing quite rapidly from a buy to a short. So it's going to have to bounce right here. If it doesn't bounce right here, we're not going to be able to go long on this thing.
Order filled.
This is the last attempt.
Stop filled.
Okay, we're out. We can't do it anymore, unfortunately, and it may turn around right here, and that's the way it goes. So let's hold off on all trading until we can see what's going on. You can see right here that the bounce idea, I knew that once it crossed, fell below previous day high, that this could happen. I'm just torn between and ambivalent at the moment between the idea of my strategy saying that we can buy as long as price hasn't gone below this yet. And once it dips below, there's the last opportunity to catch a bounce. And it may bounce right here. But once it has 2 candles below the 200 moving average, we are no longer going to go long on it. And we're waiting for short setups. So that is true. Could I have had that attitude of don't try to buy a bounce, don't try to a trend line break because of the day chart? Could I have had that? Could I have made that adjustment before that? And that's what I need to really think about. What's taken so long to make the decision that you can't buy a bull break now? What's taken so long? So I need to figure that out. So we're very tempted to go long on any kind of trend line break to the upside, and you do have days where there's a V-shaped recovery, and that works. But in the bigger picture of developing a strategy and a long-term, system that has higher probability, we're not trying to go long right now on a day like that. Again, let's look at the day chart. Boom. It's a red day. Could it go down and reverse and bounce up? It could, and I might be more interested in that if it was at some kind of a trend line maybe, or a moving average, but it's a long ways away from that. We got a trend line right here, and we had the moving average below. So even though it did see this kind of day right here where it bounced, that trend line area would be interesting if price came down to that, because that's where it happened before in that area. It's possible that it could happen again in that area, but right now it's right in the middle of no man's land. And if it happens up here, this day right here was interesting. Let's take a look. Did we have a day that went above the previous day's high and then reversed? Here was a day it went above and reversed from the previous day's high. Here's another day up and reversed. It's just the probability that it's going to stay like this or maybe even continue tomorrow. I don't know. But right now, I'm very cautious not to go long. I'm actually going to be looking to go short. Okay, so taking a trend line break right here to the upside may work if there was a certain technique we could use for counter trend trading, just to quickly grab some profits. But to be honest with you, I'm looking to go short. I'm looking to go short because now on my main time frames, price is below the moving averages. Right here on the 10,000 tick chart, and if we get an engulfing candle right here, that's going to reverse everything. It could be a reversal. It's back up over this pivot. I'd need to see price get back up over the 200 moving average and hold. And I'm not interested in taking a long right now. I just can't see myself doing it. If anything, once it gets up, it breaks this trend line right here, we may be interested in shorting this thing. That's the possibility right there. Okay, I tried a couple shorts and it doesn't want to continue to go down. And now price is getting back up over the 200 moving average on the 10,000 tick chart. So now I've got to wait. Last time it came back up over the 2,000 tick chart, it's a nice bull pop. So it's really a no trade situation right now. Can't trade, unfortunately. So now it's time to practice restraint. Just wait patiently for a good trade setup. All right, as I improve my strategy over and over, I'm looking for other ways to include trade ideas that are absolutely phenomenal. Here we have a bounce off the 200 moving average. The 200 moving average is going up. The 20 and the 50 are both parallel and headed up. You just get an outrageous drop down to the 200, and then it bounces. What does that look like on the lower time charts? Well, it looks fantastic. Look at this incredible bounce. My rule kept me from entering a trade down there because I need to improve my strategy, apparently, that there's no trades. Don't look for a long down here. Well, that's going to change starting today. I'm going to increase the parameters of my understanding and opportunities, because had I taken the trend line trade down here when price was bouncing off the 200 moving average, we would be in a really, really good position. I want to draw the trend line on the 1,000 tick chart that we're looking at here, the area of interest that it would have been. And I'm going to call this a missed trade, and I want to make a note of that, and I want to take a picture of that, and I want to include that in my studies. This was a great opportunity. Excellent. So regardless, this is a demo account. I am practicing, I am learning, I am trying to improve. And it doesn't mean this can't roll over. It doesn't mean it can't go back down. It just now got back up over the low of yesterday, which is a great place for it to kind of roll back around here. So I might try one more time to short this if it breaks this trend line right here, because this is the previous day's, it's the previous day's low, I mean. And if it falls back below that again, why not give it one more shot to short back down? Now, if it holds the previous day's high, that's going to be a good sign for the bulls. Okay, if it actually holds that area, then that's going to be a really, really, really good sign that if this thing could keep going up. Absolutely. Let's see what happens. This is a critical moment right here. Okay, we're going to try to do it. I'm going to just see what happens here. We're going to take a try. Stop over the pivot here. Target's down here. Let's see if it comes back down in this area. We'll see. It's worth a try. I probably could have got in a little earlier, but we're going to give it one try to short. It's bouncing off the previous day's low. It didn't close below the previous day's low, so that could have been a flaw, but it did break the trend line in that area, looking like it wants to roll back down. Let's see what happens here. If it stops me out, that's fine. We're just learning on a demo account. Or you can see how it's trying to decide what it wants to do. It's just chopping around previous day's low right here on the 5,000 tick chart. It dipped down, then it came above, and then it dipped down lower and it's coming back above. So it's just a really, really indecisive area. Stop is above the pivot level. Stops me out, that's fine. It's worth a try here, in my opinion, to give this a try to see if it's going to head back down. Okay, we're getting our trail stop is moving into action here. It's trailing now. It's broke me even. Now we're just looking for it to hit the targets. Hopefully it'll go down and hit those targets. I'm not trying to get greedy. I just want to win here.
Stop filled.
We got a little bit. It stopped us out on the back part for just above break even. And we trailed and it's come back and whipped us out again. So the idea was good. It just, the behavior of the price is very sketchy. So that was a win, but not much of a win. The losses have been much more than the wins today. We have to improve the strategy. We have to find areas of weakness and learn how to fill in those areas of weakness with strong ideas. Sometimes there is no solution but to not trade. And it's possible that I could just manually have trailed my stop here. I didn't want to lose this trade, so I'm just glad that it came all the way back up to my entrance and even higher, and I didn't want to. At this point, I need to preserve capital and have the mindset that this is real money and stop pretending that, treating it like it's a demo account and start treating it like it's real money. This is what I have to do. So right now, I really can't take a trade. Let's take a look. Here on the 10,000 tick chart, now it's back below the previous day's low, the white line. And it's sitting around the 200 moving average. It's this little light bounce, and it could do anything. It literally could do anything, so it's no trade time. I really would like to stay in a short position since it's on, but it's too choppy. Once it started to push up above the previous day's low, closed strong, I went long, and the target was up towards the 200 moving average, so that was a win. And we see on the main time chart that it's finally above the 200 moving average. And now it's into the caution to danger zone, but it's not in the short zone anymore where we're trying to go short. So price is now starting to rotate back up over the 20 and the 50 on the other time charts. So we're watching and waiting patiently for everything to coordinate right now. Things are not coordinated exactly, but I did want to take that bull trade right here because of the pattern and because of where it looked and what the candle formation and the pintails and just the candles, how they looked. And the fact that it was bouncing up over the previous day's high. Now, when I enter these trades like this, in this condition, in this situation, I'm not looking for a home run. I'm just looking for one-to-one base hits to keep the win rate looking half decent. But as you can see on other time charts, it's hitting downtrending moving averages. And we want really the best case scenario for the bulls is when everything is above all the moving averages. When it's below some and above others, it's not harmonized. And I can't just use, I'm starting to learn that I can't just use this one time chart necessarily. When price falls this deep, this quick, this hard, and the moving averages are bullish, I'm going to start looking at the 60-minute chart and the day chart and continue to look at those levels. Yes, it's looking very bearish, but is this quick price action an opportunity on the 60-minute chart or the day chart? Are we hitting in any kind of moving average, fair value gap, Fibonacci retracement, price structure anything like that. This has been a very good learning experience today. Very, very good. What I learned is that I can't just use the 10,000 to make all my decisions. The 10,000 tick chart is my main chart to make my decisions when everything is cooperating, when everything looks good, and I'll keep an eye on the 10,000 tick chart to keep my direction understood. It's always been bullish, but something has interfered with the bullish bias, and that has become the day chart. When price had fallen below, for instance, if we had a big dip under the 200 moving average on a day like this big this big yellow candle here, if price had dropped on the 10,000 tick chart for a quick drop and back up kind of thing, as long as price didn't drop below the high of the previous day, or once price gets back up over the high of the previous day, that makes things feel better. We're still not up over the high of the previous day on this. We just got above the low of the previous day, okay? So all of these things, everything makes sense when you put it all together. I have to put it all together. We have to be able to go, okay, this is what's different when things drop below the 200 moving average on the 10,000 tick chart. Okay, I've seen that 1,000 times. We wait and it bounces and we go long when it gets back up over the top. That's how we play it. I did this over and over and over again. So now we're looking for areas to go bullish here. We really do. We want to go bullish, but we do need price to get up over the 200, the moving averages on the 5,000. I'm not just going to go long right now. I have to wait until everything's over the 200 moving average on the other time charts. So that's something that I just have to do. This was a quick scalp move, and maybe I'll find a quick scalp move. Trade 11 was not necessarily in line with the moving average trendline ICT strategy, because this was a counter trend trade against the moving averages. It was based on a pattern recognition and where it was at. It was taking place at the low of the day. When I saw this momentum close candle, I said, okay, this is good for at least 1-to-1. All right, so that's the reason I took a trade 11. Trade 11 was not a MATICTS strategy, moving average trendline ICT strategy. Okay, now if I'm going to get back into the MATICTS strategy, I've got to wait for price to get back above all these moving averages here. Now, if I were to make a trade based on the 60-minute chart, when everything had broken to the downside, this also would not have been a MATICTS strategy. So one strategy is not necessarily superior, because having experience, discernment, and practice of multiple ways of trading is really going to make us a master. Trading one strategy for the month of March 2024 is going to help me get a good grip of this strategy and help me understand its weaknesses, which I'm learning a lot of weaknesses today on this strategy. It all looks good and seems good when everything's going bullish and everything's going in the right direction. It's perfect. It's picture perfect. But when we have these abruptions where price drops down and does crazy violations, this is a crazy violation, and it happens regularly. I mean, it happens from time to time. You know, I can remember when I was trading this strategy right here, and I remember when price had dropped here, and on this candle we went long again. So in this area right here on the 5,000 tick chart, on this candle here, when it closed back above all moving averages on the 5,000 tick chart, that's the same area on the 5,000 tick chart right here where price shot back up over all the moving averages. Okay, on the 2,000 tick chart, price had shot back up. You see the trend line I drew right here? Price had shot back up over all the moving averages. It did. It was a fast move. It was hard to find trend lines to get in. I don't know. I think that I just got in on a momentum play or something on this. But you can see that price right here is above all the moving averages right here. Yeah, right there. That circle right there above all moving averages on there. Yep, that's why I took the trade. That's why I was interested. It had crossed above all moving averages. We don't have that yet. We don't have that crossing above all moving averages yet. So until we do, the MATICTS strategy is in a holding pattern. Yes, we have it on some charts, but not on others. Actually, it's not even over the 1,000 tick chart. It could mess around this low of the previous day and just head fake all day long. But here's another trend line possibility right here where we could take a short if it breaks that level, and we might be looking for a short right there. Absolutely.
Order filled.
I'll go ahead and try it. So there's the break. We should be getting to break even here shortly, hopefully. Hopefully it'll just keep going straight down and hit our targets. That's what we really need it to do. So this is trade 12. All right, we're break even now. No matter what happens, we're on break even. Hopefully it'll keep going down.
Stop filled.
That's been the way it's been going here. We didn't lose anything on it. I think what I need to learn on this, there's some days that we just need to take whatever we can get, because that was like 25 bucks right there. But one thing's for sure, we're not afraid to go short or long, and we're trying to learn price action. And the more we experience this and the more we practice this, the better we're going to be. I have to admit, it's very difficult to not keep trying to beat the market. And I see clearly that it is not fitting my criteria to trade. Yet I'm still trying to force trades, and so I'm going to stop. Trade 13. Lucky number 13. That's my last trade for the day. I feel like if I don't stop trading right now, that I'm going backwards. So I have to put a lid on it and lock it down for the day. And so there'll be no more trades today. Now this is a demo account, and this is necessary. I have to treat this like real money. I can't keep taking trades outside of the strategy, hoping that I find a strategy that works. I need to stick to the one strategy that I'm doing. The last trade that I did was a short, which is more reasonable. You can see things are going down, trending down. The problem is it's trapped in the middle here between yesterday's low, the 200 moving average, and it's pinched and squeezed. And when price is in the middle of things like this, especially around a high or a low of a previous day, things can get ugly, real ugly. And it may be that when it's ready, it's just going to go in one direction or the other, and it's going to fly fast and it's going to look beautiful. But at this point, I've taken more trades than I should have. So I think the only way for me to get any kind of a grip on my psyche and mind and emotions is just accept the fact that today was a losing day, and I could not time the markets how I was wanting, and I had some weakness in my trading strategy in terms of taking advantage of higher time charts like I should have. Now, again, I wanted to say that if I'm only practicing the MATICTS strategy, that I would not have taken this trade. This is for advanced trading. This is just something I'm observing, making a note for, and in the future probably will want to take trades like this. But for this month of March, during this 30-day trial, I'm not supposed to be taking any trades outside of my strategy. So let me recap the whole video real quickly and say that I'm going to say that when price breaks below the 8 and the 20, and especially when things cross over like they have right here, this whole time right here that these moving averages have been crossed over, price has not gotten back up over the top of these 3 moving averages on my main trading chart, which is the 10,000 tick. I should not be looking to go long. So that would have said that this trade right here was a violation, because I went long on trade 11, and that was going against my strategy. So I have been going against my strategy today, and I have not been keeping the trading plan. I must have a clear understanding of what my trading plan is. What am I trading today? And taking trades outside of that plan shows me a lack of self-control. Right? So I'm making notes about that lack of self-control. And when I recognize this and see this tomorrow, I'll remember, and the more I point it out and the more I recognize it, the easier it will be to overcome that in the future. Okay, so let's recap. Trade 1, it was a trend line break opportunity right here. Once it got above the trend line, this trend line going down this way. And I think that this was actually the high of the previous day. Price is down below the low of the previous day. Right at one point, price was above the high of previous day. It broke a trend line and was heading right back up over the high of the previous day. That's a good sign. It just didn't work. That's okay. Take your loss. But the problem is I got in late. I don't like that. I don't like that I got in late. And then I took the loss. And then once it broke below the high of previous day right here, I should have been on caution for long positions. I don't know if I'm always going to be able to remember that. So I wanted to look at the day chart again and go, okay, once price closes below, right here, below the low of previous day, and I recognize a pattern of that taking place, what happens? I should have already have used experience, time, and wisdom to say, okay, we're going to be careful here, even if everything looks bullish on the other time charts. The problem is trying and trying and trying again to get it to work. Now you see here's the high of previous day. This is where it fell from the first trade. So I try another trend line break here. Let's see what it looks like here going this way. And I think this was a good trade. This was a good trade. I just simply had my reward too high. And that's another thing I want to take a note of. I want to take a note that sometimes my price targets are not in the right position for the daily market, for the market temperament, for the market attitude. Had I taken profits earlier, I only had this much risk. My stop was right here underneath that box. So I had 2 to 1 right there based on my risk. Okay, I need to make a note of this. I had 2 to 1 reward based on my risk, but I had put in a certain parameter. I need to write that down in my journal right now. This is a great learning experience. I need to base my profit target on the risk levels. So if the risk level is low, I don't have to shoot for a very high target. Okay? If my risk level is small, then my target can be closer. If that was the case today, I would have done much better. Trade 2 could have been a winner. Trade 2 could have been a winner. Let me take a picture of trade 2 and stick that in my notes so I'll know. Trade 2 could have been a winner real quick here. Okay, we're writing down another idea that we're learning today, and I'm going to go ahead and grab that picture. Trade 2 could have been a target, could have been a winner. Put that right there. I want to remember when I look at these notes, when I observe that, how I can see that had I had my profit target up, trade 2 could have been hit. Bounce off the 200. I need to get a picture of that. Bounce off the, well, this is not part of my strategy though. It's not part of my MATICTS strategy. So if I'm going to take trades like that, then I will have to add multiple strategies to the situation. Am I going to focus on this strategy for this month or not? Am I going to continuously be distracted, sidetracked, and attracted to other ideas outside of this strategy that I need to master? But when we have a goal, a 30-day goal to use one strategy, it says a lot about us if we can or cannot do that. And if I'm having trouble keeping that goal, then that's a sign of something bigger, a bigger problem. That could be the root problem of holding someone back for reaching professional day trading. So we don't want to break the 30-day goal. Keeping the 30-day goal in face of other opportunities looking deliciously good is a sign of self-control and professional day trading. So let us make sure that we keep this month's goal of trading this one strategy. Okay, now trade 3, again, trendline break, good idea, failed. Trendline break and failed. Now to look at it in light of where it was at when all this was taking place, on the higher time charts, all I can say is that we were still bullish at that time. It wasn't until the big drop that things really got out of hand. So trade 3 was a try to go long. Trade 4 again, because this does not look good. Unless the trend line was down here, I should not have taken that trade. Maybe that's where I drew the trend line because this trend line up here, maybe I rerouted that trend line for this next trade. That's probably what it was. Because if that was the trend line for this trade, I think this is more like probably what it was right here. Okay, that's what it was. Trade 4 was this trend line break right here. And again, I should have waited for a pullback. I might have had a better chance of it going long, even though it failed. Trade 4 was way up here. Trade 4 was when these started to turn bearish right here. And I had made a comment that this looks bearish and that I need to be careful just because of the candle formations alone and the fact that it had dropped. Here's the white line, that it had dropped below the previous day's high. Here's the previous day's low, this white line. which it's now back up over, and it probably could go strong. I'm not going to take any more trades today, just for a matter of principle and self-control. If I miss trades, great. But right now I've decided no more trades. That's also a call and a mark of professionalism. We got to decide, hey, enough's enough. But all the way on trade 4, we did 13 trades today. All the way on trade 4, when this failed right here, right up here was the previous day's high. So on trade 3, falling, it was already below previous day's high. Now, if I would have just used that principle in general, after this trade right here failed, okay, so yeah, right here on the 10,000 tick chart, looked like my last chance for a good trade. Notice this. This bounce right here. Okay, this bounce right here off the 20 EMA before it went over the high of the previous day and came back down and failed and rotated down. Look at these candle formations and look at this pattern. Over the high of the previous day, failed, bearish, 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 engulfing green candle to the downside. Wow. All of that was a warning. Now, I wanted to continue. The problem is I wanted to continue to go long because in my mind, as long as these moving averages are all in this order, that I'm going to continue. And that's why I kept taking trade after trade after trade. Look at these trades down here. Trade 4, trade 5, trade 6. So most of these trades were because my mindset was on this idea all the way down. Until it got down here, then my mindset started changing and I started to go short. But all the buying in this area was because I didn't care that it was dropping because the moving averages were still in the proper order. Moving averages were still above the 200 and looking bullish in the proper order. And so I just ignored a lot of things. I ignored the liquidity sweep here. I ignored that it might be heading down to the low. I should have been thinking it's probably going to go down to this pivot at least, and don't trade at least up until this pivot here. So what I'd like to see is on trade 4, it failed. Let's look at trade 5. Trade 5 was a small win, it looks like, and let's take a look at the trend line break that it had happened. Let's take a look at that again. Here's a trend line break right here. Once it bounced off of that, I think this was a decent trade. This could have worked. And I probably could, and I did take some profit because it trailed. It was trailing my stop just fine. My stop was down here. It kept going up, and this was a perfect trade. But look how quickly it failed, and I should have recognized this is going to keep going down. By trade 5, I should have known that. But trade 5 was a win. You see this up here, the green candle. That was my win. Up until this point here, I had, even though the bigger picture was that it had closed below the previous day's high, and on the daily chart, that's a bad sign. That was the number one error of perception. But regardless of that, right here was a decent trade, and it did win some. But as soon as it closed below these two moving averages, after engulfing this green candle right here, I should have been on high alert that this is going down to the next pivot. My mind was, okay, I'm going to keep trading because the moving averages are still in a good order. I've had a lot of success in the past in the danger zone where it just pulls back to the 200 and kicks up real strong. My mind was on that, and then I'm trying to decide right now, if I want to eliminate that, because sometimes it works really, really good, right? But right here on trade 5, this is where things started getting hairy. Let's look at trade 6 here. That big drop down, look at this. This line right here is the previous day's low. Up here is where I took trade 5. Up here's where I took trade 5, that green candle on a 10,000 tick chart that was engulfed and dropped below the 50 EMA, right? This is the 50 EMA. This is the 20 EMA. This is the green candle. This is the drop down, boom. Okay, that was trade 5. Trade 5 did win. I didn't let it play out because I had sometimes you can't let it trade out. If you're taking a trade that is in your gut feeling against the momentum, or there's something wrong, you can't put your finger on it, it's okay to not let the trade play out in certain situations. Okay, and I think that that's true. But here we are in trade 6, which comes way, way down here. And this was a bad trade altogether. I'll tell you why trade 6 was a bad trade. Because it was still above previous day's low. That's the reason why not to take the trade here. Because more than likely, it wants to take the liquidity here. Terrible trade. I went long right above the previous day's low. This was wrong because the liquidity below that point was begging to be swept. That is so true. And a lot of times we think, oh, that's an area where support is at, but really that's an area where people have their sell stops. They're going to sell right here because price breaks below it. They're going to sell, and price goes back down there and takes those stops. Bad trade, bad trade. Trade 7 again. Let's take a look at that. Now this was an incredibly bad trade because now we're below previous day's low. See this line? Trade 6 was right above. Trade 7 was right below. I tried to go long. Bad idea. Bad idea. I don't even know what to say about this. I think you just get in a trance. Sometimes you're in a trance. And right over here, this is where trade 7 took place. Below previous day's low, below previous day's low. I'm trying to think of, does it even make sense that it was even below the 200 moving average? Okay. This little pop-up right here tested the 200 moving average, and then I bought this. This doesn't make sense. So this tells me that I was out of control trading. Let me make a note about that trade 7 demonstrates an out of control trading mindset. Why couldn't I have shorted right there? Okay, let's look at this on the 5,000 tick chart. Everything, it's right in this area right here, right? It did go down a little more. Right here, it just tapped into the 200 moving average. It went up and ticked up, and it started to come back down. Over here is the area where it happened. Point is, look which direction are the moving averages going? Down. Which direction are these two going? Down. And right here, they even crossed in this area. That was when they were crossing. They were crossing down. But I guess the idea is that when they start heading down, both of them together, see what right here? Both of them are starting to point down when it dips into the danger zone. Right here, the moving averages on the 10,000 tick chart, it might have got a tick down on the bottom one. It looks like it's still trending up. Right here, the one's trending up. Right here, trending, both trip down. But as soon as this green candle closes above, the moving averages are pointing up. They're pointing up. We need the moving averages to be pointing up. This trade 7 is unbelievable. Okay, trade 7 was whacked out. Let's go to trade 8. Trade 8. Okay, here's trade 7, the whacked out one where I should have probably shorted instead of go long. Now I did short right here. And I shorted 2 times. Trade 8 and trade 9 are back to back right here. They're in the same area. Trade 8 and trade 9 are right next door to each other. And they both failed. Even if I'm not going to take a trade on it, I shouldn't be trying to short right here. Remember the 60-minute chart? I should glance over and take a look at what's going on. It slammed right down into the 200 moving average. After sweeping liquidity, I'm trying to short after sweeping liquidity at a 200 moving average. Trying to short. That's where it's probably going to bounce. Now, I'm not saying break my strategy and go long against my MATICTS strategy, but I am saying these 2 trades could have been avoided because of that higher time chart support level. And, and we're going to talk about some shorts that did work because I took 13 trades. We're only at trade 9 right now. Trade 8 and trade 9. Let me just make a note that both of those trades could have been avoided had I paid attention to the 60-minute chart. And now let's go to trade 10. So yes, trades 8 and 9 were right over here. Trade 10 was a short previous day's low. Yeah, I tried to short the previous day's low right here. The trend line was broke. I said, okay, let me just go short. If things are going to continue to do this, and let me see where I'm at on this time chart here. Yeah, the problem is with this. At the time of this short right here, price had climbed back up above previous day. You see this white line. The previous day's low. I'm thinking this is a good time to short it. I had the right thinking, I think. Trend line was broke. Price was getting weak. I think maybe this candle would have been better, even though it didn't work. Probably could have broke even on it. It was a little bit of a win. Trade 10 was a good idea. It did win a little bit. But I don't know. I don't think that it was right here. You can see these pintails as they as they go down below the 200 moving average. It dips below, it comes right back up 2 times. Dips below, goes up. This is right at the area of the previous day's low. So this area is where the 200 moving average is and where previous day's low is. A very tricky spot. I did try to short right there. I think that, you know what, I'm going to say this trade was okay. I can't help it that it didn't continue down. It could have very easily continued down. This could have been a home run trade. It really could have. Trade 10 was a good idea, except for the fact, I guess it was in between the 200 and the previous day's low, because that pinching, that when price gets pinched in between areas, there's so many people going in so many different directions that's why price acts that way. Once we get a clear break of this level and we wear out one side or the other, there'll be a nice move either to the upside or the downside. I like the idea of shorting here. I don't like the idea that it's pinched between the 200 and the previous day's low. I don't like that. So I can't say it's an A+ trade, but it was worth a try and it did win. It was managed okay enough to not be a loss. This was not a loss. Okay, so trade 10 was not a loss, and trade 11 also was a win to the long side, and this was a trade that went against my strategy. But it was a counter trend trade based on momentum, based on the previous day's low, based on candle formations, and I was only looking for a 1-to-1, and that was a great, well thought out trade. The only problem is it was not part of my strategy for this 30-day challenge. All right, so let me write that stuff down real quick. Boy, I tell you, the trading can be like a drug, just an obsessive compulsive disorder that we cannot be professional traders unless we overcome, because I'm looking at the price action. I'm going, oh man, I could try to short this again, you know, and I've already made my mind up, and it might be time to short it. That's the thing, you know, when you get your mind made up to take a trade and it's finally going in the direction that it needs to go in. You know, you've made your mind up to not take any more trades, and you got to stick to it because you just got to. Let me take a look at trade 12. I don't know what's going on with trade 12 and trade 13 here. These are 2 trades back to back. Again, another 2 trades back to back. It looks like I can't even tell if they're wins or losses, to be honest with you. This is just ridiculous, you know what I mean? Let me take a look at 12 again and see what's going on. It looks like I shorted for a break even. Okay, small win, break even. Got that written down right there. Okay, good. Trade 13 was a loss. That was my last trade. And it could have won. It could have won. It just whipped up and came right back down. Okay, let's take a look at that on the 1,000-tick chart. 1,000-tick chart, trade 13. I need to see. I shorted there. And yeah, it just went up too high. Too choppy. Trying to short, I think, was the better side to be on. I think why? Because if you're going to have one side be more legitimate than the other, it would be the short side on this. But because it's trapped in between so many key levels and important focal points with so many different people doing opposite things, there's no real advantage to one side or the other. This is too choppy. Look at this strong green candle right there. And look at this strong bearish candle back below the 200. You know, I can't trust that. So we're not going to take any more trades today, even though I strongly want to. Let me write down what trade 12 and 13 were real quick, and then we'll recap and summarize and conclude this video. All right, I wrote down price is trapped in an area of conflict. Do not take trades when price is pinched or trapped in areas of conflict where the struggle is going to go on for a while. You know, I would not have taken trade 13. Trade 13 was a mess. Trying to short this, I mean, I wanted to go short, but then again, it was above the 200 moving average. Yeah, that's right there. Okay, you see right here on this candle right here, trade 13, it literally was in the worst possible spot it could be in. Let's take a look at that. This is where I got stopped at when it spiked up, but it was above the 200 moving average and it was below the previous day's high. Right in that area is where I took my short. At least over here, when it got below the 200 and closed below the 200, there was a room for it to do something. Right, at least then it shot right back up, of course. Okay, so let me conclude today. Overall, that's why I'm doing the 30-day challenge for one strategy. There's so many areas of weakness that need to be strengthened, and so many, when you're developing a strategy, you've got to experience the market in every capacity, when it's going strong, when it's choppy, and experience the whole gamut. And if you're profitable during those times, I think you've got a good strategy. I think had I traded my strategy today with a confidence and a precise understanding about some of the weaknesses that I'm working on today, I probably would have, maybe I wouldn't even have taken more than 2 or 3 trades. That is the goal on my morning notes. If you take 3 losses, stop trading. Okay, I didn't do that either. I took more losses than I wanted to. And I could have observed everything. I could have watched everything and not taken all those trades. Okay, so I need to write that down in my notes as well, that I took more than 3 losses and I broke that rule.